Hi there, good morning. You're watching Market Cafe on ET Now with me, Snehisha, and with me is Shreyanti. Shreyanti, wishing you a very good morning. And well, this is a show where we'll take you through everything that was buzzing post-market hours yesterday and while we were fast asleep last night in India as well as globally. So let's kickstart the show then, Shreyanti, before we get stock specific, before we talk about what brokerages are flagging off for us this morning. Let's kickstart the show with what the handover is looking like globally. And well, US markets were shut yesterday, but what's been happening with US last week and what's up with Europe?
Well, absolutely. Good morning, Snehi. And it was a good month rather for the US markets when you look at it. Now, when you look at stock futures, though, what you're looking at is largely a muted move coming in, because when you look at stock futures, there's not much that is happening on that side. But when you look at the move that we've seen this month, stocks are on track to end May on a strong note after softer inflation data earlier this month and better than expected quarterly earnings reports also lifted sentiment and suggested that rate cuts could come earlier than investors had anticipated. Recently, however, stronger economic data and fresher concerns about a potential consumer spending pullback have dampened the interest rate outlook, so that is something the market is looking at. Of course, the US markets were shut for the Memorial Day holiday, but let's take a look at what happened in the month gone by. This month, the S&P 500 has advanced 5.3%. When you look at the Nasdaq as well, that has rallied about 8% after ending last week at a fresh record high. And the Dow Jones as well is up 3.3% meanwhile, and also topped that 40,000 mark for the first time ever this month. So that largely is the move coming in. Now, looking ahead to this week, investors are also watching out for consumer confidence data out on Tuesday, as well as the April personal income and expenditures report, which includes the PCE inflation reading as well. That is out on Friday as well, US time, and several companies are also on deck to report earnings results, with names like Costco, Wholesale and Ulta Beauty are also expected to give more clarity on the state of the consumer as well. So that largely is the handover coming in from the US. When you look at Europe, then European markets closed slightly higher as traders search for a direction on a quiet day for markets. So not much happening for Europe as well. When I'm looking at DAX, there was a 0.4% gain coming in, and largely a muted handover when you look at Europe as well. But on a monthly basis, though, you're looking at some strength coming for the US indices.
All right, well, US indices looking good, but with that, let's also take a look at what's happening with the world of oil. And oil prices were in a holding pattern in early Asian trading last morning as markets awaited an OPEC Plus meeting on the 2nd of June, where producers are expected to discuss maintaining voluntary output cuts for the rest of the year. On the back of this, let's take a look at what's been happening with oil. And Brent was rather flat coming in yesterday, but we did see a spike in WTI oil that spiked up by 1.3%, closing at $78.7 a barrel. Brent was rather flat but with a slight positive bias, closing at $83.1 per barrel. So that's where WTI and Brent are at the moment. Now, at the OPEC Plus meeting, the producers will discuss whether to extend voluntary output cuts of 2.2 million barrels per day into the second half of the year as well, with three sources from OPEC Plus saying countries are likely to go ahead and extend this, combined with another 3.66 million barrels per day of production cuts valid through the end of the year. The output cuts are equivalent to nearly 6% of the global oil demand. Now, OPEC has said that it expects another year of relatively strong oil demand growth of 2.25 million barrels per day, while the International Energy Agency, which is the IEA, expects much slower growth of 1.2 million barrels per day. So there's a slight parity when it comes to that front. Markets will also be watching the US Personal Consumption Expenditures Index this week for more signals about interest rate policy. The index that's due to be released on the 31st of May is reportedly the US Fed Reserve's preferred measure of inflation. Now, Brent ended last week about 2% lower. WTI has lost nearly 3% in the week after minutes from the Federal Reserve's meeting showed some officials would be willing to tighten interest rates further if they believed it was not necessary to control persistent inflation. The prospect of higher for longer interest rates has strengthened the US dollar, making oil more expensive for holders of other currencies as well. So that's the lowdown on all that's been happening in the world of oil. But let's shift focus quickly and talk about what's happening with gold, right? Because gold prices yesterday drifted higher from a 2-week low hit in the previous previous session as traders gauge fading hopes of US interest rate cuts ahead of a key inflation report later this week. On the back of that, you have gold that has spiked up by almost 0.8%. Good move coming over there. Spot gold ending the day at 2,352.4 per 10 grams. So, well, that's all that's been happening in the world of commodities, namely oil as well as gold, Chelsea.
Well, absolutely, and there's still a lot of cues that you should keep on your radar. Now, from the US, like I mentioned, you do have the consumer confidence data, and in terms of corporate action back home, you do have Adani Enterprises board mulling a fundraise and Power Grid Infra Invit income distribution as well. Now, you do have Barmer Lorry bonus issue as well as share buyback, so that counter will remain in the spotlight. And speaking of counters in the spotlight, from the primary market, you do have Office Space Solutions that has an allotment. So keep an eye on that one as well. And the lock-in period ends for a couple of counters. So Gandhar Oil Refinery as well as flare writing. So those should be on your radar. And in terms of other events, then there's Ireland, Norway and Spain that will be formally recognizing Palestinian state. So that will be in the spotlight. And FOMC members Mester, Kashkari as well as Bowman are going to be speaking, so whatever they say and the trajectory that they're mapping out will definitely be in the spotlight as well.
All right, then, well, lots to watch out for when it comes to, domestic as well as global cues to be watching out for. But let's shift focus. Let's start tracking all the global stories for you this morning. And in a landmark move, Wall Street will finally be as fast as it used to be 100 years ago, switching to the T+1 settlement that was abandoned in the early days with the intent to reduce risk in the financial system. To comply with the rule change, the SEC adopted last February, investors in US equities, corporates and municipal bonds and other securities must settle their transactions one business day after the trade instead of two as of May 28th. Regulators sought the new standard after the 2021 trading frenzy around the meme stock.
Alright, then time for some commentary coming in from the ECB officials. Then Chief Economist Philip Lane has said that the European Central Bank will cut interest rates depending on the strength of inflation and demand. It is therefore that the central bank is not committing to a particular rate trajectory. Additionally, he also said that he expects further disinflationary trends to show up in 2025. Meanwhile, policymakers Francis Villeroy said that he sees plenty of room for rate cuts. So that's the word coming in from that policymaker. And moreover, he has also pushed back against suggestions that the ECB should only cut once a quarter when its economic forecasts are updated, which would exclude a July move as well.
Alright, well, let's shift focus to the east and to China, where industrial profits rose 4.3% in the first 4 months of the year. The jump followed a 4.3% increase in the first quarter and a slew of divergent activity data for April. Industrial firms with an annual business revenue of at least 20 million yuan saw their combined profits reach a 2.09 trillion yuan during the January to April period. Over 70% of total industries realized a positive growth in profits compared to the same period last year.
Alright, then moving from China to Japan, where net external assets rose to a record $3 trillion in 2023 for the sixth consecutive year amid a weakening yen. Japan has retained its position as the world's top creditor, followed by Germany with 454.8 trillion of net external assets and China with 412.7 trillion yen as of the end of 2023.
Alright, well then let's shift focus to some central bank action coming in. Bank of Israel has held its short-term rates steady for the third straight meeting. Move comes amid rising pricing pressures, a rebound in economic activity and continued geopolitical stress. The central bank has held the benchmark rate at 4.5%. Now remember, it had lowered the rate by 25 bips back in January, and according to officials, going forward the rate cut process is going to be very cautious as well as very measured.
Alright, then moving on to some news back home, then IMD has predicted above normal monsoon this year with rainfall in June expected to be normal. However, most parts of India will see above normal maximum temperatures in the hot and humid month of June. Let's go across and listen in to what Mrityunjay Mohapatra, Director General of Meteorology, IMD, had to say then.
पूरी भारतवर्ष के एवरेज रेनफॉल सामान्य से 6% ज़्यादा होने का संभावना है। सामान्यतः 87 सेंटीमीटर रेनफॉल 1 जून से 30 सितंबर के दौरान रिकॉर्ड किया जाता है।
Alright, that's the word coming in from the Met, but earlier we also caught up with top climatologist Dr. D. Sivanand Pai and AVM GP Sharma, the president at SkyMet, to understand more on this and the kind of weather we can expect going ahead. Listen.
All India rainfall is expected to be 106% of plus or minus 4% of model error. And we are expecting that normal to above normal rainfall to happen over most parts of the country, except some parts of northernmost parts of the country and eastern part and northeastern areas, where in many areas below normal rainfall is expected. I feel that since the rainfall will be over most parts, particularly southern peninsula, where there was a lot of deficiency of rainfall last year, and also because of delayed pre-monsoon showers this year, that will benefit because of above normal rainfall. The same is the case with central India. Only I hope that because of sometime a heavy rainfall, that don't disrupt crops. But otherwise, I hope this year the crop production should be good.
We say that monsoon is going to be normal, and since the normal has got a bracket of almost about 8% from 96 to 104%, and we have given 102%, which is decent normal. Okay. 102% is as good as I will say, even it is higher side of the normal bracket. I don't see very good signs for the monsoon to start with now. We had predicted that it should be on the normal date. IMD also said about 31st of May. We said about 1st of June or so. But then if at all it starts, I see it happening as a soft start. Okay. It has changed the wind pattern. It is so. Both over the Arabian Sea, though the Bay of Bengal current is there, but the Arabian Sea side, I don't find very exceptionally good signs coming up.
Alright, then that was the word coming in about the weather as well, and that was your daily dose of global news in the morning. We told you about the weather as well, but when we come back after this short break, we'll tell you how the Asian markets are faring as well. Welcome back. Thank you so much for staying tuned in. Well, as promised, let's take a look at how the Asian markets are faring. And Asia Pacific markets were range-bound as investors assess comments from the ECB officials signaling that rate cuts may be on the horizon for the world's largest economic bloc as well. Now, when you look at ASX 200, what you're looking at is that it was marginally up and it was recording gains of about 0.1%. Right now, it's reverse course and it's down just a shade. So Australia is of course expected to release its retail sales data as well later today. So that will be on the radar for ASX 200. When you look at Nikkei, then that one is also in the red, down about 0.4%, currently down about 0.3% on your screen. Hang Seng and Shanghai are both in the red. Let's take a look at Hang Seng first, and now it's reverse course. It was in the red just a short while ago, and currently it's not doing all that much, up about 0.1%. Shanghai though is in the red, down about 0.2%. And when you look at South Korea's Kospi also, what you're looking at is that it's marginally higher, up about 0.2% thereabout. Now, yesterday, of course, we closed around the 22,930 mark, and currently, what is being penciled in terms of the spot and on a futures and a spot basis is a decent start coming in, at least on a spot basis. And when you look at a futures basis, a flat opening is what we're looking at. So that largely is the handover coming in terms of what we're penciling in for today. Let's see how that pans out for us.
Alright, well, subdued start indicated for us this morning, but the global handover looks pretty okay, so we'll see how that pans out for us. But let's also take a look at the entire lineup that we have for you on the market today. Interesting set of names coming up. At 9:20, we'll be joined by N. Jaykumar, MD at Prime Securities, to talk about markets and mandate and how to navigate all this volatility that we're seeing in the markets amid the election frenzy. Followed by that, at 9:35, we'll be joined by Raj N., the founder and executive chairman at Zaggle, who will be here to talk about the company's growth roadmap going ahead. At 10 a.m. then we'll be joined by the CFO at Electronics Smart, Premchand Devarakonda, and they'll be here to discuss the earnings of the company for the quarter that went by and the FY25 to come ahead. And keeping it with earnings at 10:20, we'll have Shrivar Kheruka, the Managing Director at Borosil Limited, who will also be here to discuss the muted set of numbers that we did see coming in from the company in the quarter that went by and the outlook for the quarters to come. So, well, lots of managements as well as market voices joining us today. So, you stay tuned to the channel.
Welcome back. Thank you so much for staying tuned in. Well, let's take a look at some more commentary coming in. And Goldman Sachs revised its 2024 GDP prediction for India by 10 basis points. And according to the new figures, their GDP forecast is at 6.7% there on your screens. The equity analyst firm said that they expect investment growth momentum to sustain. And it also said that the RBI is also likely to cut rates in Q4 of financial year 24. RBI's higher than expected dividend payout also aided the positive outlook. Remember, investors will keep an eye out for India's GDP data, which is scheduled to be released on the 31st. And a couple of important pointers that they've highlighted is that they expect the RBI to cut rates in the second half of financial year 24, and the investment growth is something that they see sustaining as well. So that largely is the commentary coming in from Goldman Sachs in terms of India's GDP outlook.
All right, and that's Goldman Sachs outlook for India's GDP figures due on Friday. We'll be keeping a close eye on that metric as well. But moving on, Finance Minister Nirmala Sitharaman has recently commented that the Modi government has brought transparency to the budget and has increased global trust in the Indian economy. Let's go across to my colleague Prakash Priyadarshi for more details on what she said. Prakash, take it away.
Yeah, the Finance Minister has outlined the budgetary and expenditure reforms taking place during the Modi government. Using a social media account, the Finance Minister has mentioned that the government has reshaped budget from a mere record of expenditure into a strategic blueprint for the development. While acknowledging advancement of budget cycle, the Finance Minister has mentioned that it has helped government to make better balance between financial outlays and expenditure. In fact, centre and the state governments are in a better position to plan the expenditure in advance. Coming on to railway budget, which was merged with the union budget from the financial year 2017-18, the Finance Minister has said it has brought affairs of railways to the centre stage, and number of supplementary demand for grants operated by railways has been reduced to 1 from 16. A very significant development. Along with that, the Finance Minister has lashed out at the UPA government, UPA regime, where standard financial practices have been changed in order to make budget numbers look more favorable. But the Finance Minister has pointed out that the one should not ignore the fact that the countries with transparent budget numbers being seen with more respect and viewed more favorably by the international agencies like World Bank and IMF. And this can lead to improved global trust as well in terms of attracting more foreign investment. Along with that, the Finance Minister has also pointed out several reforms measures taken place by the Modi government for allocation of expenditure along with infra sectors as well. When it comes to infra sectors, infra ministries like road transport and highways, railways, where the budgetary allocation have been increased by the Modi government, and which has reduced their dependence on market borrowings.
All right, thanks Prakash for that roundup. So that's the commentary coming in from the Finance Minister. But days ahead of the last leg of Lok Sabha polls, Prime Minister Modi, in an interview to a news agency, came down hard on his opponents, accusing them of joining hands with the corrupt. He also justified action by independent agencies who he says are now going after the big fish. The Prime Minister also lamented that he is accused of being anti-globalization when he only wants to create new opportunities for Indian talent. Let's go across and listen into a slice of what he had to say.
हमारे देश में कभी भी भ्रष्टाचार में पकड़े गए लोग या किसी को आरोप भी लगा तो लोग 100 कदम दूर रहते थे। आजकल तो भ्रष्ट लोगों को कंधे पर बिठा करके नाचने की फैशन हो गई है। जो लोग कल तक जिन बातों की वकालत करते थे, आज अगर वही चीजें हो रही हैं तो उसका विरोध कर रहे हैं। पहले तो वही लोग कहते थे सोनिया जी को जेल में बंद कर दो, फलाने को जेल में बंद कर दो, और आप वही लोग चिल्लाते हैं। और इसलिए मैं मानता हूँ आप जैसे मीडिया का काम है कि लोगों से पूछे कि भाई बताइए, छोटे लोग जलने जाने के या मगरमच्छ जलने चाहिए? पूछो ना जरा पब्लिक को क्या ओपिनियन है। अगर अमेरिका में कोई कहता है बी अमेरिकन बाय अमेरिकन, उसको तो हम सीना तान करके गर्व करते हैं, लेकिन मोदी कहता है वोकल फॉर लोकल, तो लोगों को लगता है देखिए ये ग्लोबलाइजेशन के खिलाफ है। तो इस प्रकार से लोगों को गुमराह करने वाली की प्रवृत्ति चलती है। जहाँ तक भारत जैसा देश जिसके पास मैन पावर है, स्किल मैन पावर है, अब मैं ऐसी तो गलती नहीं कर सकता कि मैं गेहूं एक्सपोर्ट करूं और ब्रेड इंपोर्ट करूं। मैं तो चाहूंगा मेरे देश में ही गेहूं का आटा निकले, मेरे देश में गेहूं का ब्रेड बने, मेरे देश को लोगों को रोजगार मिले। तो मेरा आत्मनिर्भर भारत का जो मिशन है उसके पीछे पहला मेरी जो प्रायोरिटी है, मेरे देश के टैलेंट को अवसर मिले, मेरे देश के युवा को रोजगार मिले, मेरे देश का धन बाहर न जाए, मेरे देश में नेचुरल रिसोर्सेज हैं उसका वैल्यू एडिशन हो।
All right, that's the word coming in from PM Modi. But, well, one phase of election left. Exit polls are just around the corner. And, well, the results of the election also out on 4th of June. And as we are nearing the conclusion of the elections, my colleague Sharad is here to analyze the markets over the election years, the moves that we've been seeing. Lots of data crunching, but Sharad makes it easier for us. Sharad, take it away.
Well, the mandate and the elections, that's a very interesting concept we have taken out, and for the last data from the last 40 years or so, we have taken this data, and out of 10 times, 8 times there will be a positive return in a calendar year whenever there is elections held in India. Maximum returns we saw in the years 1991, where a lot of reforms was actually coming out in the markets, and that is why the impact was there. And overall, as a median return is expected, that would be 21% in an election year. Now let's understand over the last 12 elections, right from 1980, how the markets have fared. And of course, twice it has happened. It has turned negative also in the year 96 and 98. But overall, if you see, the trajectory is on an upward basis. Now, apart from the yearly numbers, we have a result day move. What was that reaction coming in? And of course, over the last 4 election dates we have taken in, and we can see on the screen itself, it has been on the positive side 3 out of 4 times. And on the May 23rd, 2019, it was on the downward side of almost 1%. 2024 so far has been very strong when it comes to Nifty. Nifty is up almost 6%, and also Nifty Bank itself, if you look at it, that has this year given investors return of almost 2%. Now let's bracket the performance which has happened between the UPA government as well as the NDA government, and we have taken last 4 elections, the UPA Part 1, UPA Part 2 from 2004 onwards. We saw 162% gains on Nifty, while it was 74% in the second term. Now looking at NDA also, there was a Part 1 NDA 58% was there, and the last one, the current one, is coming in at almost 97%, or you could say almost 100% gains. So this has been the moves when it comes to the political parties. But now importantly, let's track the move 1 week prior and 1 week later for the markets. Of course, the volatility was there in 2004, both on the negative side, but largely on the positive side, if you look at it, especially 1 week later also, there has been strong up moves coming in when it comes to 2009, 2014, as well as 2019.
All right, thanks Sharad for that roundup coming in when it comes to markets and mandate. But market shows are largely focused on policy continuity leading to a potential rally post June 4th. Let's also understand the rationale with the likes of Mark Mobius, Dinshaw Irani, as well as Vikas Khemani. Take a look at what they had to say.
Modi, of course, will still be pretty much in control, and he'll be able to continue this incredible growth program that he has for the country. Definitely be Modi again. The question is whether he can have control of Congress and have the ability to change the Constitution. That's the big question mark. And of course, if that does not happen, then there might be some disappointment. But I think, it's already being fed into the price.
We just need the government to continue. It didn't matter whether they came in with a 300 plus or a 400 plus kind of majority. All we needed was them to continue, and the continuity is what we were looking forward to. And I think more or less that is a given. So, I mean, we can keep arguing about the 2/3 majority and all that, but still, I think that is a given.
And I do believe that we are in one of the best wealth creation cycle, and hence that should continue any continuity will only further that confidence.
The PSU space that we are in is mainly the oil and gas space. Some of the banks are there with us, and obviously some of the defense players are there with us in the PSU space. So I think even if there was some amount of uncertainty, these spaces are quite sanguine. Probably oil and gas would have been a question mark, but still we believe that given that the budget is going to be in July, there's still a lot of steam left. Even after the election results are out, I think the run-up to the budget should be good.
PSU banks is something we have been quite positive and we continue to remain positive. But let's say for the example, oil and marketing company, we have not been at all buying because the governance is not fixed. It's a lot more political. So government interference keeps on happening every time price of oil goes up and down. So we basically prefer where there's a tailwind of the sector, when there's a least government policy interference is happening, it's more run by the individual banks, individual organization, then the leadership of the organization has to be good.
You could find margin of safety in BFSI, given that earnings growth has been pretty strong. You could find margin of safety even in the technology pack if earnings recovery were to come in the second half of this year. But there could be a significant margin of safety in public sector units, given the growth trajectory on many of these monopolistic sectors like power, logistics, oil marketing companies, commodities. You could see distinct value being, trading at single-digit P multiples.
The sector leadership, in my opinion, will continue to be capital goods, infrastructure, defense, and those kind of names, as opposed to the other parts. The other parts, of course, we would do cherry picking with regards to where valuations are favorable, and if there is a turn of fundamentals, whether it is IT, whether it is FMCG, and whatnot. But directionally speaking, over the next 4 or 5 years, the sector leadership is likely to be infra, capital goods, and whatnot, capital goods and construction, as long as there is policy continuity on the top, which is what's the basis assumption in all of this.
When the private sector came in the 80s, so wherever the private sector is given a free hand without interference, we have become globally competitive on our own. So defense is something we just started 3 years ago, 5 years ago, where the private sector was opened up. So the runway can be huge. Our total defense manufacturing is less than $15 billion today. The world market is $2.2 trillion. So that runway can be huge. So there are some pockets like that. Premium consumption, if the population demographics works the way it is, for the next 20 years, you'll have some items which will continue to grow fast.
All right, with that, we'll slip into a very short breather on this edition of Market Cafe, but we'll be right back with more stock-specific news and updates, so you stay.
Welcome back. Thank you so much for staying tuned in. Well, as promised, let's get you a list of stocks that you should keep on your radar this morning. And Janae is standing by with just that list. Janae?
Well, yes, on the back of earnings, we have Crystal Integrated Service. The company reported a very good set of numbers. The revenue saw an uptick of 52% coming in at 292 crores versus 192 crores year-on-year basis. The net profit also saw a significant jump of 70% coming in at 16 crores versus 9 crores. If we talk about operating margins, it stood at 6.4% versus 4.9%, so a counter to watch out for. Moving on to TARC, the company reported a poor set of numbers versus estimations. The revenue saw a significant downtick of 94% coming in at 9 crores versus 135 crores year-on-year basis. The company reported a loss of 52 crores this quarter versus a profit of 2 crores on last quarter same period. The EBITDA also saw a loss of around 4 crores versus a profit of 38 crores. Moving on, Timken India will be in focus as sources say from agencies that the promoters will be selling in a block. The Timken Singapore is seeking around to sell 6.6% in Timken India, seeking $213 million, and the floor price for the block deal is expected to come at 3,550 per share. Moving on, Nazara Tech will be in focus as the promoters Mitter Infotex has sold around 48.84 lakh shares at rupees 620.5 per share, and the buyer was Plutus Wealth Management, who bought all the 48.84 lakh shares at the price of 620.5. Moving on, keep your eyes on Adani Energy Solutions as the board has approved fundraising plans via equities or any other eligible securities for amount not exceeding up to 12,500 crores. And lastly, Hariom Pipe Industries will be in focus as company has approved acquisition of operating assets of Ultra Pipes, which is a partnership firm of the company, for a consideration amount of 40.16 crores.
All right, Janai, thanks so much for taking us through that list. We'll be keeping a close eye on all of those stocks, but let's get a little sector specific now and let's talk about the banking sector. And let's take a look at UBS's conference on Axis Bank and ICICI Bank. These two banks will be in focus on the back of this note coming in. And what are the key highlights on the two banks from this note? Gaurav is here to take us through just that. Gaurav, good morning. Take it away.
Well, yes, UBS actually hosted senior management from ICICI Bank and Axis Bank. And first, let's talk about what they believe about the system overall. So, what they believe is that the system loan growth is likely to moderate closer to the deposit growth from in coming quarters. We may see unsecured loan book growing slower than what we have seen in FY24, and NIMs are also likely to be moderate from here on. Apart from that, they are expecting asset quality and credit costs to normalize over the coming few quarters. And if we talk specifically about ICICI Bank and Axis Bank now, the management has actually reiterated their positive stance on the coming quarters. So, for example, for ICICI Bank, now they believe that the business is likely to grow in mid-teens, where we may see higher mid-teens, higher teen number coming up for the growth. Apart from that, they are also expecting NIMs to moderate for the bank. But if we talk about ROE, that is likely to remain in 17 to 18%. Within the loan segment, they are expecting retail and auto loans to remain in mid-teens, while we may see some slowdown coming up in corporate loan book. Apart from that, they are expecting OPEX to actually likely to moderate, and that is why we may see some improvement in cost ratios for the bank. And lastly, they're expecting credit cost to inch up almost by 60 to 70 basis points. But overall, if we talk about the asset quality and unsecured book, they do not see any risk in that area. If we talk about Axis Bank now, they have also reiterated their positive stance. Management believes that they will grow around 300 to 400 basis over and above the industry standard growth rate. Apart from that, from here on, they will be focusing more on deposit growth and specifically on the LCR deposits. They are expecting NIMs to actually increase or remain stable at 3.8%. And lastly, they believe that cost to income is likely to remain at elevated level, but ROE is going to be sustained at 18%, and that is why they do not see any kind of risk. Now, overall, if we talk about UBS, they actually have preference of HDFC Bank on ICICI Bank over other banks. They also have buy rating for IndusInd Bank. For Axis Bank, they actually have a neutral rating. And lastly, they believe that they have sell rating on SBI Bank. So definitely watching out on what happens in the banks in coming quarters, because a strong word is coming up from brokerages as well as the management of ICICI Bank and Axis Bank.
All right, thanks Gaurav for that update. So those were the key takeaways coming in from UBS's conference. But let's move away from that and let's take a look at some more earnings then. And let's also take a look at some poor earnings that we've gotten from NMDC as well as Borosil Renewables. So a disappointing set coming in from the both of them. Let's take a closer look at all of this with Winnie. Winnie standing by with more details on this.
So yes, we're seeing a bad set of numbers that's coming from both these companies. That's NMDC as well as Borosil Renewables. Now NMDC, in terms of overall, when you're looking at it, the revenue was in line, volumes and realization was also in line with the estimate. But we saw myths coming in on the EBITDA fund. So operationally, it was a weak performance because of the much higher cost and expenses which have increased. That is something that impacted the EBITDA performance of the company. And overall, the major shock came in for the company was royalty, which saw a jump of as much as 20% sequentially. That's on a quarter-on-quarter basis. Other than that, the EBITDA per ton also saw a fall. It was at around rupees 400 per ton versus reduction of 400 per ton from previous, and it's come in at 1,700 per ton approximately, which was lower than the estimates. Higher than expected tax rate is something that dented the profits of the company. So yes, that was the main reason that we saw NMDC's numbers missing what the street was expecting. Borosil Renewables also was impacted because of the slowdown in demand that impacted the top line of the company. This is the first time that the company reported an EBITDA loss since December 2018, and EBITDA was impacted by lower selling price in India due to the dumping and demand slowdown. Overall, the ex-factory selling price also during the quarter was at around 98.8 rupees per mm versus 132.7 rupees per mm. This was versus last year. So you've seen that fall even on that front. So because of all these factors, we've seen both these numbers were impacted.
All right, Winnie, thanks so much for taking us through that. So NMDC and Borosil Renewables are rather weak set of quarter four numbers coming in. We'll keep a close eye on that as well in today's trading session, both those counters in fact. But moving on, let's go across to my colleague Ansh, who's standing by with an F&O snapshot and what the derivatives is expected to look like for the trading day going ahead. And Ansh, well, 100 is where we hit on the Nifty and came back slightly below. So what are the charts looking like as of now?
Yes, and that was the third session actually of hitting record high. But if you'll see the chart, it seems like index is getting a bit exhausted by forming that high from last 11 sessions. Because in last 2 sessions, we have seen that Nifty has touched record high, but then it has closed slightly in red. Whereas on option front, we are seeing call writing happening at 23,200 mark, indicating option traders expecting Nifty to take strong resistance around this level. If we talk about Reliance, which is the big mover of big mover of Nifty, here we are seeing that Reliance has actually given a breakout from its key resistance a few sessions back, but now it's been correcting a bit, which is causing some selling pressure in Nifty as well. But Reliance seems to have good buying pressure at around 2,900 levels. So this is the level where we may see some support in Reliance as well as in Nifty as well. Moving on to Nifty Bank. If you see the chart, Nifty Bank has been taking resistance at that around 49,500 to 49,600, where it had taken resistance earlier as well. So this is the level where we need to give a decisive breakout to be on a positive front. Whereas on option front, option traders are actually getting bullish here. They're expecting Nifty Bank to go around that 49,700, which is above the resistance that we saw on chart. Whereas on downside, we are seeing some good put writing happening at 49,000 psychological mark, indicating good support around this level. Let's also talk about FIIs. So in previous session, we saw that FII has turned a net positive after being negative for 16 sessions. With this, the total long has touched 7-year high as well. This indicates that they are getting very bullish in the market. Lastly, let's have a quick view on few stocks as well. And we are seeing good long build-up happening in Ashok Leyland, Jubilant Food and Persistent, where short build-up happening in Alchem Lab, Aurobindo Pharma and Manappuram Finance. So keep an eye on the stocks.
All right, Ansh, well, thanks so much for taking us through what the FNO snapshot is looking like for the day ahead. We'll be keeping a close eye on all the levels as well as all the stocks that you've mentioned. But with that, let's talk about a company that came out with a rather inline set of numbers for its Q4. And these numbers came out yesterday post-market hours. And the company I'm talking about is LIC. So that's going to be a stock to watch out for today. Let me take you through the numbers quickly. Total premium income has come in at 4.75 lakh crore, which is a very subdued growth of 0.2% on a year-on-year basis in FY23. This is, of course, the entire FY24 growth that I'm talking about. FY24 PAT has come in at 40,676 crore rupees. So that's a good growth of 11.7% for the PAT compared to the previous year. New business premium is slightly subdued now. That amount has slipped by 1.7% on a year-on-year basis for FY24. Number of policies on an individual basis also down by almost 0.2%. Total EP, however, has seen a growth of 0.5%, and the value of new business has also grown by 4.6%. So, well, a fairly decent set of numbers coming in. Now, when you take a look at the value of new business margins, that has slightly expanded at 16.8% for FY24 compared to 16.2 in FY23. Expense ratio, however, is looking pretty stable, so that's looking good on that front. Now, persistency ratio, the rate at which policies are being renewed, has come in at 77.6% compared to 77% in FY23. So, stability is seen over there as well. This is for 13 months. Now, the same metric on the 61-month figure has seen a slight bit of a drop from 61.8% in FY23 to 60.8% as of now. Yields are looking rather good. Share of non-par has seen a slight bit of an improvement, and solvency ratio also looking pretty stable. So that's a lowdown on LIC's numbers. But Shreyansi will take us through the brokerages as well.
Well, absolutely, yeah. So when you look at brokerages, then when you're looking at what JP Morgan had to say, they're maintaining an overweight on the counter with a target at 1,340. And in terms of the Q4, they're highlighting good numbers as well as an NBV beat. And they're also talking about how they're welcoming a strategy that is prioritizing growth over profitability. In terms of key catalysts, they're highlighting market share gains as well. And they're saying the stock is inexpensive, and they also see further room for strong growth. So that largely is the word coming in from JP Morgan on LIC.
Alright, well, with that, we're completely timed out on this edition of Market Cafe. But you stay tuned to the channel as the market takes all the action ahead.
If you like this video, then like, share and subscribe to ET Now.